When a stock runs like crazy in earnings, even great numbers might not be enough to prevent it from selling off.
Sell.
Just look at Micron, symbol MU. It's a key maker of memory and storage chips that you know I have championed for years now. Going into last night's close, this stock was up 170% from its April lows, including a staggering 40% gain just since the end of August. Oh, it's been a terrific move, as Micron, widely dismissed as a commodity chipmaker, that's the old days, is finally getting some credit for all the business that they'll see from the AI data center boom. Everybody talks about NVIDIA, and so many of the data center infrastructure plays, they deserve it, but these are big warehouses full of servers, and those servers need storage. They need memory, especially high bandwidth memory. Remember that term, HBM, to keep everything running smoothly, and that means they need Micron, which is why the stock has been nothing short of unstoppable. That is until today. See, last night, Micron reported, when you report after such a huge rally, you're dealing with great expectations. Yeah, like Dickens. So great that it was impossible for the stock to keep climbing, even when the numbers were good. And it did climb after the close. We went up to 172, but that was after hours trading. And today, not so hot. But the numbers were good, people. Ignore the trading. No, the numbers were like stellar. Micron's revenue was up 46% year over year, almost 22% from the previous quarter, coming in much better than expected. Their gross margin came in at just under 46%, which was up over 900 basis points from the year before. That's almost impossible to do. Their operating margin was 1,250 basis points. These are insane figures. If you're in the business, you'd be just saying, no wonder the company could earn $3.03 per share when Wall Street was only looking for $2.55 per share. In the previous quarter, Micron earned $1.91. So this was a spectacular pickup from just 3 months ago. Now, with a company like Micron, which is known to have big swings in both directions, swings that investors are always eager to get ahead of, it's not enough to just have good results. You also need to have strong guidance showing Wall Street that the future remains as bright as the past. Micron only gives guidance for 1 quarter at a time. That's been their tradition. But their outlook for the current quarter was excellent. They're talking substantially higher than expected sales. Think 40 to 47% revenue growth. Management said to expect their gross margins to come in somewhere between 50.5 and 52.5. This used to be a commodity player. Wall Street was only looking for a little more than 45%. Put it all together, and Micron guided for $3.65 to $3.85 per share in earnings this quarter. You know, the analysts were only looking for $3.10. This is quite a beat. On the conference call, Micron's staid CEO Sanjay Mehrotra was about as effusive as he gets, talking about how his business is positioned. He's just such not a hype artist. I love that about him. He said that the company's leadership in advanced technologies, including the high bandwidth memory products for the data center, has enabled a, quote, differentiated product portfolio that offers a strong return on investment for a customer. Differentiated means not commodity. Basically, they are much less of a commodity chip maker than they used to be. Now, Sanjay said that AI-driven demand is accelerating. And importantly, industry DRAM supply remains tight. These DRAM chips, DRAM, are old-fashioned memory. It's the most commoditized part of the business. And as long as inventory remains tight, then the business will be fine. He then dug into the company's various end markets, and to no surprise, it's Micron's products for the data center that are driving these incredible numbers. Mehrotra noted that the combined revenue from just 3 types of products that are popular in the data center, high bandwidth memory, high capacity DRAM products, and low power DRAM products, ones that don't burn so bad, reached $10 billion in their fiscal 2025 year, in their 2025 fiscal year, which just ended in August. This was a 5-fold increase versus the year before. On top of that, Mehrotra said, quote, in addition to being a demand driver, AI is also a powerful productivity driver for Micron. Yes, Micron itself, explaining that the company is using AI throughout its entire production process, from design to technology development to manufacturing. This is why they've been so good at profiting from the data center, because they're speeding up the design and production process to get the hyperscalers the hardware that they need. By the way, you also talked about gigantic use cases developing with AI, like code writing, like agentics. That's the process of AI-driven agents helping you instead of people. People are more expensive than the agentics. Mehrotra talked about 1-gamma DRAM products, which Micron began shipping earlier this year. As was the ramping production of 1-gamma DRAM products, the company's manufacturing process became efficient and dependable in record time, 50% faster, 5.0, than the previous generation. In short, Micron's not just riding the data center wave like everybody else. They're actively innovating and getting products that are ideally suited for the data center to market faster than the competition. And by the way, just so you know, these guys used to be behind a lot of the companies, like in Japan. They're now ahead of them. And look, as strong as data center business is, it's not just the data center. Micron's other top-end markets are also looking pretty good at this point, even if they're not putting up the insane numbers like anything connected to AI. For example, the company took up its expectations for PC unit shipments. They were previously expecting a low single-digit percentage increase, but now they're talking about mid-single-digit growth for the 2025 calendar year. A lot of that is Micron's benefit is that Windows 10 is being phased out. So in other words, Microsoft change is driving more business for PCs. In smartphones, management said that, quote, an increasing mix of AI-ready smartphones continue to be a key catalyst for DRAM content growth in mobile devices, end quote. Apparently, one-third of flagship smartphones shipped in the second quarter contained 12 gigabits of more DRAM content, which is a lot. Listen to this. Quote, given recent product launches from Apple, Samsung, and other smartphone OEMs, we expect this mix to increase over the coming quarters, end quote. In short, the smarter your phone gets, the more of these memory chips it needs. And Sanjay kind of intimated to me when I asked him about this morning that, well, these companies are doing very, very well, including Apple. Much better than I think people thought they were going to be doing. Even in the automotive and industrial market, which has been one of Micron's weakest areas, management said, quote, demand strengthened throughout the quarter, end quote, exceeding our forecast. Now, Micron's also seeing better profitability in auto and industrial thanks to better pricing and more demand for higher tech products. Still, after the stock jumped higher and after hours trading last night, Micron ultimately pulled back almost 3% today. Sell. Again, this should not have been a surprise, given that the stock was up 40% in the 3.5 weeks before the quarter. But the bottom line, coming into Micron's earnings, I was wondering if the company could report anything that could justify the stock's incredible run. You know what? That's exactly what they did. After this titanic quarter, I think Micron can keep running. I just hope we get more pullbacks like this so that you can buy it on weakness. Yes, the Micron quarter really was that good. Mad Money's back after the break.
Coming up, is all that's traded truly golden? Cramer's going off the charts and looking at the price action of both gold and Bitcoin. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.